Is your practice tired of wrestling with insurance denials, deciphering EOBs, and watching your revenue slip through the cracks? You are not alone. Welcome to The Claim Game, the podcast designed to cut through the confusion and provide you with the best practices for revenue cycle management success. We are Jeremy and Catherine Zug, and we've been with people just like you in the trenches. Each week, we'll break down complex billing processes, share real-world solutions from practices like yours, and ask questions of the game makers and changers of healthcare so you can take control of your revenue. Let's turn those claim denials into deposits and help you return to focusing on patient care. It's time to win the claim game.
Welcome back to The Claim Game. I'm Jeremy Zug, your host, and as a reminder, in this season of The Claim Game, we're going through the revenue cycle management best practices, one billing domain at a time. And last time we were here, we talked about insurance claim denial management. I want you to remember these are your key billing domains, and mastering each one is a non-negotiable. We're going to be grabbing magnifying glasses. We're going to zoom in on each billing domain. We're going to talk about what are the winning strategies? What are practices and agencies doing well to navigate the really glorious mess that insurance is and healthcare in the United States looks like? But you can do that with ease and confidence, ultimately claiming victory for your practice's bottom line. Quick reminder, if you missed the initial setup of how all this stuff works and to understand the full scope of how the billing domains work together, be sure to check out episode 1 for the complete overview. Now we're going to focus on aging management. We've been focused on claim aging management or balance aging management. And today we're going to focus on patient aging management. Get ready to look at the unique challenges of this particular workflow and discover the optimal moves to conquer it. So we're looking today at patient aging management. And this particular workflow is not about fighting off a giant insurance company or navigating bureaucratic rules. This is about collecting and communicating to actual human beings sitting in your actual office or telehealth practice, either way. And listen, I know, I get it. You became a provider to help people and not because you want to run a collections agency. And so to that end, we want to help you take that burden off your shoulders. And I'm going to show you and walk you through how to manage patient balances without ruining your relationship, your brand value that you've built with your clients and in your community. We're going to cover why your front desk is your first line of defense and how to automate the quote unquote boring stuff. It's not boring to us, but for a lot of people, it makes them a little bored. And how to handle those awkward deductible surprises, if those exist, like a pro. So let's jump in. We are going to begin by talking about two sides of the coin here, two sides of the patient aging, payer aging equation. First, we have to understand and visualize accounts receivable, which is your total outstanding money, like a giant treasure chest. But this isn't a normal treasure chest, right? If you open it up, it has two completely different locks, and you need two totally different keys to open them. And if you try using the same strategy for the whole treasure chest, you're going to fail. The first lock, which we've talked a lot about in the last couple episodes, is payer aging. On the left side of the chest, you have what insurance companies owe you. Opening that particular lock is a game of logic. It's a game of data, facts. It involves CPT codes, modifiers, forms, claim scrubbing, clearinghouses. When an insurance company doesn't pay you, it's rarely personal, right? In fact, I would say it's probably never personal. They aren't mad at you. They're a machine. The algorithm found a mismatch, maybe a modifier, or let's say NPI was missing or something, and the gate was slammed shut. To solve payer aging, you don't need a lot of empathy. You need accuracy. You need tenacity. You need a process. And sometimes you need to pick up the phone and speak the language of a bureaucrat. So that's the one side of this treasure chest. Let's talk about the second side of this thing, which is patient aging. And that's the right side of this treasure chest. This is money that is directly owed by the individual sitting on your couch, sitting in your waiting room. This is deductibles, copays, coinsurance, or even full private pay rates. Here's the thing, you cannot treat insurance payer aging and patient aging exactly the same. We see this all the time. We see practice owners getting frustrated about how much time they're spending trying to collect from insurance companies or patients. And so they go into collections mode and they treat a patient who owes them $100 the same way they would treat Cigna owing them $100. And that's disaster. If an insurance company is slow, you can file an inquiry, you can demand a review. If a patient is slow, you're managing a relationship, budgets, and confusing life circumstance, and it's complicated. So here's the 90-day mistake that I want to walk you through. And this is the biggest mistake we see practices make. And let's say we're dealing with a clinician named Sarah, right? Sarah feels awkward asking for money. So she waits and she sends an email and then maybe waits another month. And then all of a sudden, Sarah wakes up and it's been 90 days. And she looks at her billing and realizes, whoa, this client owes $400, $450, who knows what it is, right? So she reaches out, but by now, this client is gone, right? No response. The trail has really gone cold. I want you to think about this from the patient's perspective. For 3 months, they've been coming to see you. Maybe you haven't mentioned money or copays or deductibles, or maybe we haven't collected at the front desk. They assume everything's fine. Maybe they thought their insurance covered it. Maybe the patient didn't realize the deductible reset. I don't know. But when you hit them with the bill 90 days later, the rules of the game feel like they've been changed. They feel ambushed and it creates friction. And that's where things get a little hairy. They start thinking, if I owed this money, why did you keep seeing me? Why didn't you tell me? And suddenly the relationship that you've built with this client starts to crack. Not because you charged them, but because you waited too long to charge them and didn't communicate to them about what was coming. I'll give you a good example of this. My wife and I and our 2 kiddos were getting ready to go on a cruise that we had planned for a long time. And as you know it, our kiddo got into a little bit of a hang up and got injured on this cruise. And we had to disembark the ship for liability reasons, apparently. And we eventually went to a provider that helped us deal with what was going on. And we went home. It was all fine. And then I think it was 90 or 120 days later, we got a bill from the provider. We are like the wrong people to do that to, because I know that there was an EOB sitting on this person's desk for a while, partly because I got the EOB from my insurance company 30 days after the event, which feels normal. Doesn't feel normal. That is pretty normal. But then got a bill a long time after that. And then the bill had a bunch of weird stuff on it that we were able to get removed. But that's a good example of what happens in healthcare settings. You have a lot going on. And so we need to talk about how to deal with patient aging in a way that fixes this. This episode is brought to you by Jane, a practice management software and EMR built to support you in the day-to-day work of running your practice. If you're a health or wellness practitioner, you already know the care you provide starts well before your client arrives and extends far beyond the treatment room. Jane is there to support you in every part of that experience. With online booking, your clients can book at a time that works for them. And with features like notifications, they'll even be able to grab last-minute openings when they pop up. It's an easy way to keep your schedule full while getting your clients the care they need. During your appointment, Jane's AI-powered documentation feature can help you thoughtfully take notes so you can stay present with the person in front of you. And after appointments, you can end your time together on a healing note, not a transactional one, by charging the card on file. To learn more about how Jane can support you and your clients, head to jane.app/demo. And one last thing, if you're ready to get started with Jane, you can use my code in the show notes for a 1-month grace period on your new account. So how do we fix it? The best way to handle accounts receivable is to make sure it never becomes accounts receivables in the first place. Now, I know that sounds a little bit like a trick question, right? What's the best way to not get injured skiing? Don't ski, right? I get it. But We want to stop the bleeding before the cut even happens. So we set up our defenses during the intake process, and we like to call this the pillars of collection. And if you get these things right, your patient AR is probably going to drop by 80% if you get these right. So first is a rock solid, and I mean rock solid financial policy. Maybe you have this, but sometimes this is just a dense PDF that you email to the patient. They scroll to the bottom in their intake, agree, and they never read a word of it. That's not really a policy, that's like a wish. So a rock solid financial policy isn't just a form they sign, it's like a rule book, right, for your practice. It needs to be explicit, state in bold letters that payment is due at the time of service. Not when the statement comes, not at the end of the month, at the time of service, when they're in your office, when you have the best chance to collect. You need to verbally review this during the first time you see this patient. Just so you know, our policy is that copays and deductibles are processed when you're here, right? Or 24 hours after the session. But set the expectation that payment is due up front. A lot of offices now have a sign at the front, a big blue sign or something that says you got to pay when you're in here for your session or for your visit. Because they know, those offices know the moment you walk out the door, so does your cash. And so you got to get that right first. Pillar number 2 is manual eligibility and benefit checks. And I'm going to get a little controversial here with you, but I want you to think about implementing at the top of your process a manual eligibility and benefit check. I can almost hear the groanings, right? Jeremy, my EHR does this automatically. There's a little button that I click and it says verified. I'm going to be really direct here. I never, ever recommend relying on your EHR's automated eligibility tools. Why? Because those automated tools are scraping databases that are often outdated or generic. They might tell you active coverage, but here's what they won't tell you. This patient has a specialized health plan carve out that is managed by a third party, or this patient has a $5,000 deductible and only $40 has been met, or you're a tier 2 provider instead of a tier 1 provider. There are 100 different ways that those systems get this information wrong. What if you're a telehealth provider and it just pulls the in-office benefits for you instead of the telehealth benefits? There are a lot of ways that this can go south. So if you rely on the green check mark from your EHR and see the patient for 5 sessions, and then the claims come back denied, now the patient owes you $700. Who's the bad guy in that scenario, right? Your office might be, because you told the patient, yeah, it looks like you're covered. For the first eligibility and benefit check, I would implore you, verify that the patient has a deductible, verify that your tax ID, your NPI, your address, that place of service that you're going to be seeing this patient is covered. Make sure you have all of that detail written down so there are no surprises, right? As you get into billing, we recommend using portals to make this a little faster, but establish clear expectations for how their benefits work out at the front end. And then here's another one. Because you call, get a reference number, write it down, be sure you can track this information. Imagine how much trust you build when you call a patient before the first appointment and say, hey, I checked your benefits. Good news is you're covered, but you should know you have a really high deductible. So the first few appointments are going to be X dollars out of pocket. I wanted you to know now so that you're not surprised later. People take that news way, way better than a $700 bill in their mail. I can promise you that a $700 surprise in the mail is a 1-star Google review, is a canceled client. And not only that, but that person is going to tell everybody they know about that experience. So make sure you are providing top tier customer service to your clients. All right, pillar number 3, credit card on file. This is a non-negotiable for modern practice, especially modern sovereign practice, independent practices. Think about the last time you stayed at a hotel. You walk up to the front desk, they welcome you, give you a big hug. Maybe not. I guess that'd be kind of odd. What's the first thing they ask you for? Credit card and your ID. So they charge you for the room right then. No, they don't. They put a hold on it. They keep it on file so that when you order room service, watch a movie, break a window, you just walk away. They take your card at check-in so that your checkout is seamless later. Okay, so now I hear Sarah, quote unquote. Sarah is one of our therapist personas or private practice owner personas that we talk about a lot. This is an amazing provider, right? She's really good, but she hates the business side. And I can hear this provider just saying, I just feel like a debt collector asking for a card on file. It feels aggressive and it feels like I don't trust them. And I really get that. I do. So if that's you, know that at first that can seem kind of slimy, kind of icky. But what if we frame this a little differently? What if we realize that asking for a card is actually a way to intervene with the client, help them take ownership of their healthcare, right? So here's a script that we use that we recommend when a patient or client hesitates or feel awkward. This is usually what we say. We say we require a card on file for our clients. The reason we do this is that when we are doing our best work, getting that test done, and especially right at the end when we're wrapping up some work, we can focus 100% on taking care of you. We never want our work here to end in a transaction. We want it to end with support, right? You feel the difference there? You're not saying, give me the card so I make sure I get paid like some kind of ogre. You're saying, give me the card so we can protect and help you in your healthcare. You're taking the business burden off their shoulders as well. Clients do not want to fumble for a wallet while they're dealing with a test, a session, a service, right? Make it seamless. Take the friction out of this thing. All right, so we've set our defenses, but we live in the real world. Credit cards decline, cards expire, people ghost. If a balance does slip through and ends up on your aging report, we need a systematic battle plan. So don't just wake up on a Tuesday, panic, and frantically chase the biggest numbers on your aging report. Stressful and inefficient. And you need a consistent weekly, maybe daily process on how the old debt is managed. So we break this down into 3 buckets: 0 to 30, 31 to 60, and 61 plus. Or if you want to add a 4th one, you can go 61 to 90, 90 plus, right? 0 to 30 days is a gentle reminder, right? If somebody's in this bucket, maybe it's a mistake, the card declined, they got something in the mail, whatever. Or maybe your email went to spam. Don't panic, don't get aggressive. An automated statement is usually enough. If you have an admin, a real simple email script works, right? Hi, client name. Looks like the card on file was declined for X. Can you update that in the portal when you get a chance, right? Or here's a QR code to pay, or here's a link, right? Even better. Keep it light, assume positive intent. If you have folks in the 31 to 60 day bucket, that's a personal outreach. This is where alarm bells should start ringing softly, but they're ringing. This is the phase of personal outreach. We get past the automated emails. If they haven't paid in 2 months, another email is not going to fix that. I recommend having someone from your office, ideally an admin or a biller, not the clinician, if possible, reach out. The goal here is to find the barrier. Are they broke? Are they confused by the bill? Are they avoiding you? So the script here is, hey, client, we notice there's a balance of $300 on your account. We want to get this resolved so it doesn't build up. Do you need to set up a payment plan to break this into smaller chunks, or can we take payment for it right now? Offer the solution before they ask for it. It removes some element of shame here. 61 to 90 days. This is where you make a decision. This is kind of a danger zone. At this point, the balance is really a threat to your practice's sustainability. Let's say you're seeing a client weekly and they haven't paid in 3 months. You're essentially loaning them thousands of dollars of your time. And here's the truth. You might start to resent your clients. You may not want to admit it, but when you see their name on the schedule, you feel a pit in your stomach, and that affects everything you're doing. You cannot provide high quality care to someone when you are also frustrated or maybe assuming that they're exploiting you. So I recommend a firm but supportive final note. Say, we value your care and the progress you've made. However, our policy states that we don't allow balances to exceed 90 days. So to maintain an active spot on our schedule, we need to settle this balance or agree to a structured payment plan by Friday, right? We linked the payment to their schedule, their time with you. We didn't say we're sending you to collections. We basically are saying to keep your spot. Right now, sometimes you can't terminate care for ethical reasons. And when that happens, we really recommend payment plans or other offers of payment to keep the lights on. But patients value you, right? If they're seeing you, if they're coming to you, they really value the time that they're spending. And when you link money to access, you often get a resolution. And if they don't pay, well, you have to be willing to pause treatment, refer them out, or you can send them to collections. But we want to make sure that we are getting paid for our services. So let's recap. You have this treasure chest right in front of you, right? On the left side, we have insurance. Fight those folks with data. With patients, we manage those with relationships. We have our defenses, a financial policy, manual eligibility checks, card on file. Then we have our battle plan, right? When clients start to age or owe us money, we automate our outreach. We do personal outreach and payment plans, and then we do a final decision about whether they're going to collections or not. So here's your homework. I want you to look at your patient aging today and look at it, find the clients who are in that 60-day bucket, and I want you to start to draft that personal outreach script. Stop avoiding it. And remember that to be clear is to be kind, and to be unclear is to be unkind. So let's be the clearest that we can. Thank you for listening. I'm your host, Jeremy Zug. We will see you next time on The Claim Game. If you enjoyed today's episode of The Claim Game, please take a moment to leave us a rating and review wherever you listen to your podcasts. It really helps new listeners to find us. Make sure you never miss an episode by subscribing to The Claim Game on your favorite podcast app. Your feedback means so much to us. We want to provide valuable education about revenue cycle management. So if there's something we didn't cover in our topic that was a burning question for you, please let us know so we can try to get you the information you desire. You can find the links to all resources we mentioned in this episode in the show notes. And if you want to dive deeper into our resources, we have two places you can do that. First, you can go to our blog at practicesol.com/blog, where we have 8 years of educational blogs. If you want to learn more about what Practice Solutions does, reach out. We'd love to hear from you. Just go to practicesol.com to learn more and to connect with one of our awesome people on our team. Thanks for listening. We are Jeremy and Catherine Zug, and this is The Claim Game. See you at the game table next time.